Hello, Jim here. In my last video, I talked about my monthly option wheel strategy and how I can make around 1,300 on a monthly basis with around 25 or 30,000 in capital. Today, I want to talk about my other option strategy, the spread wheel strategy. I've got dedicated to it around 60,000 in capital, and I'm almost able to make 2,500 on a monthly basis. I'm going to share with you how it's different from my other strategy, what makes it work, what makes it not potentially work, and I'll go over the trade. So be sure you stay until the end because I think it's going to be well worth your while. Let's go ahead and jump right in. This is the same spreadsheet I used in my last video that talked about my monthly wheel trades. What I did differently this time is I broke the strategies into specific tabs. So today we'll be just talking about the spread wheel trades. Over here are the monthly wheel trades. Again, if you're curious about them, take a look at my previous video. For this one, my goal was to pretty much do something like the wheel, but to do it with spreads. So I typically use stocks that had a lot more volume and open interest and implied volatility. One thing I noticed after the fact is I probably used chip manufacturers way too much, which they across the board have been hit pretty hard. But I've been doing this 2 months and I've had fairly good success. When I first started out, the chip makers were doing pretty well. So Micron, I did it originally on 11/12 for an expiration of 11/22. So the durations, the DTEs were definitely a lot shorter for the trades that I did within this spread wheel trade. So I did a 10-day DTE for Micron. I did it 190, expiring on 11/22, and made some pretty good premium. I made 323 in premium, which is almost like a 700% return, which is pretty amazing. I also use Lam Research, which again is another chip maker. Going forward, I'm not going to be using mostly chip makers. I'm going to be looking at different kinds of companies. So another vertical put credit spread, this one with a smaller spread, a $750 spread expiring on 11/22, opened on 11/13. So this one was even shorter, more like 9 days. And you'll notice they were all around 35, 36 deltas. Made 243 in premium. And this one was even higher, almost 784% profit margin. Then I did a paper trade. I'm learning Thinkorswim. So I did a paper trade with Qualcomm, and it went really well too. Not quite a $10 spread. It was expiring in about 9 days. And it also did well, almost an 813% return. And the reason the returns are so high, these are yearly. So it's the ROI is adjusted on a yearly basis. So the fact that the DTE is only 9 or 10 days, it really makes the ROI really high. Now, I did a roll with Micron, and I kept it at the same strikes. At that time, Micron was still doing really well. They got battered recently because of earnings, but I did another 190 that made 314 in premium, and that included closing the existing position and opening a new one. So I almost did as well as the original trade. And this one again was, let's see, when I opened it. So I opened it on 11/21 and closed it on 12/6. So it was a little bit longer, more like a 680 return, which, yeah, was 10 days to DTE. And then another Lam Research expired. So I rolled it and it expired. So made some additional premium and then let it expire. And it also had a good return, not as high as some of the other ones, but I made $230 on it. So that was November. November worked out quite well. For the month of November, I made $1444. And then in December, I did even more. So I did switch. I used Four, which is a financial payment type of company. Did a smaller spread with them, 97.50, 90, 27 delta. Brought in 255, and the DTE was right around 16 days. So 260 or 255 days, and not quite as high as some of the others. But again, this was the first trade I did on a company kind of moving away from the chip makers, and I plan to do that even more so in January. So here's another Micron roll. I rolled it 12.5 to 12.13, so even shorter. And this one had, I think this was about the time they started coming down. I brought in 204, so not quite as much. Still almost like a $260 or 260% return on investment, or ROI. Then I did AMD, so I switched to AMD from Lam Research, which, and then I also rolled it. So I did a 135, 125, and I brought in 261. So not quite as much, 392% return, which is really good. At that time, it was 135, 125. Then Micron, I did another roll on them on 12.16, going out to 12.27, which was just last Friday, and I brought in another 389. So I brought in quite a bit with Micron. This was over 800%. Now, this is when things started to get a little topsy-turvy. Micron had earnings. Earnings were actually okay. The guidance wasn't so good, so they got hammered. They dropped, I think, close to 15%. So I did decide, instead of letting them get assigned around, I believe it was around 100 before that, I decided to roll it down. I still brought in some pretty good premium, but I also widened the spread. So by widening the spread, I was able to take the short down from 100 to 92. So I'm definitely taking a little bit more risk, but I do like 92 a lot better. I think currently they're around 88. They've still been, nothing's really changed news-wise. They've just been, the momentum has been down on them. I do think they're going to bust out at some point. And this one is a little farther out. It went out to 124, but I did bring in some really good premium, $519. And this is like 115% return. And this is the current position I have in place. So my required capital is 4580, which is, it's the spread. And I believe this might be, no, it's still two contracts. So it's the spread minus the 519. So definitely taking a little bit more risk. Actually, I believe these are three, so let's do the three. Yeah, it's three contracts. That's why it's showing that. And then if we come over AMD, I did a cash secured put. So AMD also has been hit hard recently. It kept dropping, hitting lower lows. So I did roll it down. I originally had it at 135, but I was able to convert it from a vertical put credit spread into a cash secured put, which allowed me to lower the strike quite a bit. So even though it's my spread wheel trades, I do now currently have one cash secured put, which I may turn it back into a vertical put credit spread depending on what happens next. I did have to go a little farther out to 21, 25, closer to 60 days. And I brought in $585 in premium, mainly because I was able to buy back the short. Then I could sell the put that was, I believe, in the money at the time. And then I was also able to sell the cash secured put. So I am definitely taking in a little bit more assignment allowance, 24,000. And then so my required capital is a bit higher. So, and you might ask, well, why did you do that? Again, trying to get it from 135 to 125. And it's currently, I can probably mark this. I have these as red because they were in the money, but it's currently a little bit above 125. So it's not currently in the money. Now, if it gets assigned to me, I'll quickly sell a covered call. That's where it's going to be a lot like the wheel. But I'll be able to sell a covered call. My cost basis will be more like, I believe I calculated around 118 for AMD. So I should be able to sell a covered call. And we'll actually look at Seeking Alpha and play with that a little bit. But I brought in some pretty good premium. Next was 4. And 4 has stayed out of the money. So I was able to roll it just as it is, 97.50, 90. And I did have to go out to 117.25. I realized I didn't have any weeklies. So I didn't do a very good job picking 4, they primarily only have monthlies. At least at this time they did. But I brought in 592, rolled it all the way out to January. And here you can see the return, which was 46 days. So even though these were originally just weeklies, having switched to 4, I had to go a little farther out. But if these companies get assigned to me, let's actually look at Seeking Alpha. So here's AMD. You can see it was as high as 211, and it's kept hitting lower lows. I do think they're going to rebound at some point. Their PE is still a little bit high, so their valuation is still a little pricey, but not, a C, not as bad as it used to be. It used to be a D. But if you look at earnings, they had earnings back at the end of October, and their next earnings is 128. But if we looked at earnings estimates, we can see here's their current PE, but they're projected to do $5.10 next year, which would be like a 24 PE, and then 26 is even higher, and every year they're going to be doing better and better. And they've been able to kind of meet that. If we look at the earnings summary, we can see, if you look at year over year earnings, you're 41% higher, 55%, 59%, 47%. And if we go to valuation and we look at capital structure, they have very little debt. So total debt is only $2 billion on a market cap of 203. So don't really worry about debt. So I do think they're going to recover. And if they have a major bounce, like if you look here, we go out to, I don't know, maybe 10 years. So you can see they kind of, they recover pretty nicely. I see them dropping, maybe drop a little more, but then recover and probably head up above 150. And if they do that, then I'll have more choices. I could probably turn this AMD cash secured put back into a vertical put credit spread. And, I'll roll backwards sometimes. So I might even roll it from 221 back to 117 or do something a little bit unique if that does happen. They did jump. Friday was a rough day, but I think last Thursday they might have gotten up to like 128 or something. Now, I think Micron even got pretty high. Let's look at Micron really quick. And you can see, I'll show you what earnings look like now that the data is updated. So they've also had a lower low. And this is pretty common with most of the chip makers. Even NVIDIA has been hit hard recently. But these guys have a 12 PE, which is relatively low. If you look at their valuation, we got an A. They don't pay dividends. But if we look at earnings, they did beat earnings. Not by a huge amount, but they beat both GAAP and just regular normalized earnings per share. Now, if we come down and we look, we can still see this at one point was like 360 or 380. So that's where it came down. But they still at 245% year over year, 158%, 80%, 49%. If we look at their earnings estimates, we can see here, they're projected to do almost 1150, which would give them almost, a 7.5 PE, forward PE. And they are going to drop down a little bit, but they're going to stay that high for quite a while. So this is why I think they potentially could do really well. It's just a matter of time. I also own 200 shares in my Schwab brokerage. And those, I believe, I picked up at like 50 or 60. At one point, I had covered calls on them, and I've been able to write some really good covered calls, but they got deep in the money. Now they're out of the money, so that's a good thing with what's happened with them. So their market cap is right around 98 billion, 14 billion in debt, which, again, I want it to be less than 50%, so they're well below. They're fine with debt. They have quite a bit of cash, which is nice. Profitability looks good. Return on common equity, I'd rather that be a little bit higher. Return on assets is okay. So it is an A plus. They also, I believe, have really good cash from operations. So overall, a really good company. Let's also look at 4 real quick. Yeah, Shift4 Payments. So they're a payment process. So their profitability isn't as good. their PE ratio is a little bit high, so their valuation may be a little bit pricey. Yeah, so valuation's a bit pricey. Let's look at their capital structure. So debt of almost 3 billion on a 10 billion market cap, which is fine. I as long as it's below about 4.5, then I think that's good. Do they pay dividends? I don't think so. Earnings, let's look at year over year. They did miss earnings slightly. Let's look at year over year. Looks good, 60%, 652, 1620. So they are growing nicely. So here you can see their numbers. They've got an A for growth, revenue growth, almost 31%. So they look pretty good. Financials, momentum, they've been pretty strong. So just a different company. They are a little bit pricey, so I wouldn't be surprised if they came down a little bit. They're currently 104.70, and then here I've got them as 97.50. So they're still pretty well above that. So I should be able to roll them or let them expire, or let them get assigned. So what I wanted to share with you here, so total income, which is just pretty much all the put premium added together, came out to 42.52, and then interest, and this is updated for the latest interest. So currently Fidelity's paying 4.15%, and this is on any cash that I'm using for puts. So for my cash secured puts or my vertical put credit spreads or even iron condors, I'm being paid interest on that, which makes a big difference. It's a big number every month. So monthly income I'm at 2369.65. Yearly income 28,438, which is almost like, well, total required capital 29, total assigned capital. So if all three of these companies were assigned to me at the same time, I would need 70,000 requirements to be in there. And then monthly, that's like a 7.93% return. And again, you don't necessarily have to do this many contracts. You could say, well, I only want to do one, and one, and you would still do pretty well. You'd probably pick up, maybe a third of that, which for a lot of people, that's still a very good return. So the rule of 72 here is 0.76. So you'd be doubling your money more than every year almost. Now, that's based on required capital. Now, if we do it, I might have these backwards. This is the total assignment. So it's like for total assignment based on this 70,000, it's like a 3.37%, which is almost like a 40% on a yearly basis, which is a rule of 72 is 1.78. So you're doubling your money in these accounts maybe every 2 years or more often than every 2 years. Of course, these trades did go against me towards the end of December, and it could get worse, and that's why I rolled them down to pick up pricing closer to what I want to own them at. Like when Micron dropped so much, I prefer to own it at 92 than I think originally I might have been at 110 or 110 with them. So now if I combine both of these accounts, 59, so almost 60,000 total required capital, almost 100,000 for total assigned capital. Again, that's if everything was assigned to me, which I've been doing this a long time. That's never happened. I think the most was in 2022. I think I had 5 positions assigned to me in the same month. So the chance of that happening is pretty slim. Now, I'm not saying it couldn't happen, but it is fairly slim. Total income for the two accounts, $34.93. So if you look at monthly ROI for required capital, again, the number's much higher, 5.89. And if you look at it based on total assigned, 3.5. So you're talking yearly ROI is almost 42%, which, again, I've only been doing this for 2 months for, my spread wheel trades, 3 months for the monthly. So even if I took a lot less risk, and like I said before, if I did one contract up here, or maybe only did it with 1 or 2 companies, I could potentially get closer to a 20%. And I've mentioned in previous videos, I had a financial planner back, I guess, 7 or 8 years ago. And I was lucky ever get more than 8 or 9%. I think it typically was always between 6 and 8%. I've been averaging in most of my accounts, and again, most of my accounts are fully invested. I've been averaging like this year in my Fidelity accounts, I'm pretty close to 18%. 17, 18. I think it fluctuates. It got up to almost 20%. Now it's around 18%. And that doesn't include appreciation, and some depreciation. I got hit hard with some companies like Polaris, Intel, and a few others. So, you know, can you do better than a lot of the financial planners, or just I then compared it to my 401k and I did a lot better than my 401k. So you can do better. It's not a get rich quick. I did hear some scary news from Invest Talk. I like to listen to Justin, and I believe it was the Thursday podcast that they did. They said that in Gambling Anonymous, there's a lot of people now that are going into Gambling Anonymous related to trading options, that they've lost lots of money and they are taking crazy risks and turning it into speculation and gambling. I encourage people to stay away from that. If you feel like you're going down that avenue, take a break, reevaluate, reach out to me or someone else in my membership, or someone else that can maybe help you identify if you are taking too much risk or speculating too much. Again, I'm an investor. I'm a long-term investor. I invest first and I sell options, trade options, primarily to bring in extra income. So as always, leave a comment. Let me know what you think. Are you doing anything like this? Are there any other names you might consider that this might work for? I may actually do this with some ETFs. So as always, thanks for joining me, and I look forward to seeing you next time.